Today's featured guest, Marin Aleksov from Rosland Capital. Marin Aleksov of Rosland Capital CEO. Welcome back.
Well, thank you.
Start today with your outlook on the sector. You know, it's a new year. We've had several tough years. Some things are worth waiting for. Give us your outlook, please, on the precious metals.
Well, my outlook has changed a little bit since the first 2 weeks here. With the talk now that, recession might be looming and so forth, then you have to start thinking, is QE4, is that a possibility? Is the government going to step in? That's a big if, but that's a big game changer for gold. And as an investor, if I'm going to look into gold, the last thing I want to do is be caught on this thing, because there's just no way of knowing. When the Fed has the meeting, they can just turn 380 and go, you know what, we're going to raise it a quarter, we're going to lower it. So you need to, in my opinion, be protected before something like that happens, because I don't think anyone's going to, announce that beforehand. So I'm watching this market closely. I did rebound today, but if the earning reports now they're saying it's going to be weak, if the unemployment number starts going the other way again, you never know. They might actually start helping again.
So you're not going to take the Fed officials at their words, our policymakers, that we could see as much as 100 basis points increase, and it was just a one-and-done scenario at the Fed?
I don't think they're anticipating this kind of a correction worldwide. I mean, China is a big if. If that thing starts going south, if the U.S. follows, if the earning reports get worse and worse, because the punch bowl is gone. This is the first time in a long, long period with no free money. Now, valuations of company become an issue. You have to actually look at the balance sheet. You have to start looking at are they actually making money? So investors are going to have to actually do diligence now to actually invest. So there's going to be way, way more volatile, because the free money to support all this is not there. So we don't know how this is going to react. And I'm sure the Fed is going to have to do whatever is necessary to make sure this economy doesn't stall completely. Last thing they want to see is unemployment start spiking again and people start being laid off. And the last thing we need is another Lehman moment. So, yes, I don't think the Fed is 100% clear what's going to happen.
The spike up in yield certainly has investors on the edge of their seats. No one wants to see the junk bonds imploding. It definitely has been a sea change moment. If the economic conditions do deteriorate, I think it's really almost last resort. I mean, it's the Federal Reserve. And avoid the next Lehman or MF Global or who knows, Bear Stearns moment.
Absolutely. I mean, if you look at oil prices, they're almost below $30, right? How are they going to hit their 2% target with that going on? Two, where's all the money that everyone's supposed to be saving, supposed to put back into the economy? Why is not that happening? Consumer stocks are not doing well right now. The prediction for for the companies, which is 2/3 of the economy, is not reflecting the big savings that everyone's supposedly have in gas. The bottom line, it doesn't matter if it's $1 gas. There's no money. People just don't have the money. And that's what this is happening. When you take away the free money, which basically, in my opinion, is an illusion to begin with, next 2-3 months is going to be very volatile. And then put China on top of that thing, what's going to happen? I don't think anyone has real numbers from China. All you have to do is sit back and wait, and that's when you're going to have those 7-8% drops in a day. So if I'm a gold guy out there, hey, diversification is everything. I mean, you shouldn't put all your eggs in one basket, but if you have 20% in gold or 30%, whatever you feel comfortable with, hey, better safe than sorry, because this time around, I don't think you're going to have time to react much.
I'd like to hear a guest who's completely transparent. Jim Rogers, we just had him on the show, says the same thing as you. We don't know. We don't have a crystal ball. We do see some footprints. We see some fingerprints. Let's start increasing our portfolio exposure to the metals. And every time there's a sharp drop or a decline, you can actually use that as a buying opportunity. What do you think about the equities, the shares, and the precious metals? Are they starting to show a relative value?
Some of the mining companies I see today spiked. I don't know why, but I haven't really looked into it. But again, there's a price. The more of them consolidate, the more of them get off the market, the less they're going to produce. The prices will, at some point, hit a floor. And at that point, there's going to be buying opportunities for these guys. Again, that's not my area, but I think that especially the funds, the ETFs, is going to probably start benefiting. Because from a I look at more from regular guys, investors out there, is that you're doing the gold, you have 23%, and you have 70% of your money in. Of course, you want equities to do well, and if they do, great. But God forbid something should happen, that 20% will see, it will balance out that. It's not about, hey, equities is not going to do well, I need to diversify completely, everything's falling apart. You still want equity to do well because that's the majority of your portfolio. Again, gold, in my opinion, is there for safety and security. If you can make some money along the line, great, but it's there for those big moments when you need it.
West Texas Intermediate crude testing 30. Who knows? Are we headed 25, 20? On the one hand, that's great for the consumer, as you mentioned, a huge component of the country. But on the other hand, it's tough on the S&P 500, which has energy components in that index. It can be challenging as well for the Midwest because of all the fracking interests that are being decimated by this drop in energy prices. So
trying to keep the price down. I keep hearing that the reason is to get the fracking guys out of business, but at the same time, I think it's more to it. The demand is slowing down. There is no demand for it, like in China and so forth, because of their slowdown. So at the end of the day, the Saudis might try to get the frackers out and fight Russia on this to keep the oil as low as possible, but at the same time, I just don't see the demand either. Because if all the economies were booming like they're supposed to, or everyone's saying they will, then oil wouldn't be at $30. It's not possible. We've seen that before. It'll be $100 and so on. The U.S. wouldn't be at 1-2%. It would be at 7-8%.
if I see the energy level at around $20 area, I'm thinking long-term equity options, 2-3 years out.
Absolutely. At $15, $20. Remember back in the day, so how can oil be $15, $20? And I think it's a lifetime opportunity at that point if it goes that down low, especially long-term. You can, in my opinion, you cannot go wrong unless everything just implodes. But then you have the gold.
One of our guests pointed out recently, Nick Barishev, read all kinds of research and studies noting that gold, the yellow metal, holds up remarkably well during deflation. In fact, his information shows that it does better during deflation than inflation. But the reason for the concern and the misinformation, even disinformation and confusion stems from the fact that gold does drop in dollar terms, in currency terms, but it drops by such a smaller factor than real estate and other commodities and paper assets that people forget to adjust it, not in terms of the currency, but relative to competing asset classes. And when you do that, wow, are you glad you have a lot of yellow metal during deflation.
I mean, gold did very, very well during deflation. It's always been the case, actually. There is a little bit of a misconception that, hey, gold pops when you have inflation. It does because people are scared of losing the value of the dollar, purchasing power, basically. That's why they go to the metal. But again, your equities will go up, so will real estate, but it just buys less of goods. It's too much money chasing too few goods. So at the same time, even if you have gold, yes, it will work as long as you don't cash it out. It becomes more expensive to get it, but it gets you less. Gold has done really well for us during deflation for last. If you look at 8, 9, 10, that's all it was. We haven't had inflation in a long, long time. We can't even get to 2%. The gold's done remarkably well. Let's not forget, less than 2007, gold was $700-800? It's still up 20-30% since then.
Or go back to, the dot-com implosion. Gold was around $250 an ounce.
Absolutely. So, gold, in my opinion, has this staircase. It goes up, it'll drop back, but it very rarely goes back to where it was down to, say, $600. I just don't see that happening. I think, what's his name, either Mark Favre or Rogers said that we'll never see gold below 1,000 in our lifetime. I think he said it. Don't quote me on which I think about 6-7 years ago, and that might be true. It's good for it's also good from our point of view for investors that are on the fence on gold because I think anything below 1,000, a lot more people are going to feel more comfortable diversifying into gold for sure.
You know, I mean, how could you miss the opportunity to pick up real sound money when there's so many question marks in the currency market? I mean, there's a lot of nervousness in the Eurozone with negative interest rates. The yuan, a competing reserve currency according to the IMF.
They're also long. I mean, I go to conventions. I'm going now in February 4th to the Money Fair in Berlin. There's a rumor in the Chinese. They're saying, they're doing the yuan, and then they're going to peg it to gold to stabilize. It's a little far-fetched, but everyone's saying this is why they're so transparent now about how much they're buying, selling. They get a reserve currency, and then they're going to start moving to back it X amount % by gold.
Wouldn't it be interesting to find out that they had tremendously more gold than they've reported? Talk about changing the whole global currency, just turn everything upside down. Yeah, because I think they've got something like 3,300 tons is what they're saying right now. But what if it was 10 times that or 5 times that? There's been considerable speculation. Gold flowing in through Hong Kong, and it's going into these unknown sources. I really wonder if it's not the People's Bank of China behind that.
I went to Hong Kong last year. If you look at the physical gold market, I think the U.S. is like 5% of the global market. Hong Kong is 25%. It's pandemonium over there. I mean, there's a whole different attitude when it comes to gold. They don't trust nothing but gold. And obviously, when you have such a volatility in the world, you don't know. If I'm Chinese, hey, we don't know the numbers. We don't know what's going to happen. It's more of a gambler attitude. So gold is something that they really see as a protection against their own currency, their own economies, because over there no one trusts anyone. For them to actually move into backing this by gold one day, I don't think it's that far-fetched. It will definitely calm down the entire population there, I can tell you that.
Is there anything else you'd like to share with the listening audience today? Anything in 2016 that they should have on their radar screen?
Just look at the economy. If it looks like it's going to recession, don't be surprised if the government steps in one more time here and changes course. And be ahead of it. I will not wait. I will be ahead of it.
Well, Marin Aleksov, Rosland Capital CEO of the company there, and it'll be interesting to see how everything plays out this year.
It's going to be a very, very volatile year.
All right. Thank you, sir.
Thank you.
Here is your mining quiz for the day, compliments of GoldSeek. Which company has the largest undeveloped gold reserve in North America? Seabridge Gold. Now, which company has the largest undeveloped copper reserve in North America? Seabridge Gold again. Seabridge has more gold reserves than Kinross, Yamana, and Agnico Eagle. Last year alone, Seabridge added 515 million tons of new inferred resources containing nearly 6 million ounces of gold and more than 6 billion pounds of copper at their giant KSM project in British Columbia, Canada. Now they are drilling at KSM again with multiple rigs in a 25,000-meter program. Find out more by visiting www.seabridgegold.net. Traded on the NYSE, symbol SA, and the TSX, symbol SEA.
GoldSeek employees may or may not own shares. Nothing contained herein should be construed as investment advice.